Artificial intelligence, the buzzword that promised to change everything. Tech giants called it the next industrial revolution, the tool that would rewrite how we work, think, and live. Generative AI was the star of that story. But as 2026 looms closer, the hype is starting to sound a little hollow. The miracle machine is beginning to look less like a revolution. It feels more like a very expensive science experiment. This week, the International Monetary Fund and the Bank of England both issued stark warnings. The world's stock markets are flying dangerously high on AI euphoria, and gravity, they hinted, always wins. The IMF chief, Kristalina Georgieva, didn't mince her words. She says uncertainty is the new normal. Frontier. Now what does that mean? The world's economy may look steady from afar, but the ground beneath it is shifting. The IMF noted a few telling signs. Gold prices are soaring to record highs, tariffs are distorting trade, and stock valuations are reaching levels eerily similar to the dot-com boom. The Bank of England echoed the concern. It warned of a sharp market correction if AI optimism fades. Economists have a checklist for bubbles. AI, they say, ticks most of the boxes. One is rapid price growth. Tech stocks, especially AI-related ones, have surged beyond what fundamentals justify. Nvidia, for instance, is now more valuable than GDPs of countries. Second is excessive optimism. Everyone assumes AI will revolutionize everything. 3 is overinvestment. Firms are pouring billions into data centers and chips, that too often without clear paths to profit. 4 is circular money. AI companies are investing in each other's infrastructure and products. It is reminiscent of the dot-com bubble. Now, 5th is concentration risk. Tech now makes up roughly 40% of the S&P 500. When one part of the market seizes, the whole economy catches a cold. And if you look deeper into the AI economy, the picture gets murkier. OpenAI is now valued at $500 billion, yet it doesn't turn a meaningful profit. It signed massive deals, but remains dependent on investor faith. AI infrastructure is also outrageously expensive. Data centers require astronomical power, chips, and cooling costs. And yet, most businesses still struggle to justify the return. A recent MIT study found that 95% of enterprise AI pilots failed to deliver meaningful financial returns. However, not everyone is panicking. Jeff Bezos recently said the AI boom is more of an industrial bubble than a financial one. And that means, even if it bursts now, society will still benefit from the underlying innovation. A raw word from Sam Altman of OpenAI also agrees. He admits that this is sort of a bubble, but also believes AI will change the world. It's research. So what could pop the bubble? The Bank of England lists a few possibilities. Disappointing AI progress, power shortages, or simply competition eating into sky-high profit expectations. Investors, meanwhile, are already seeking safety in gold. The IMF warns that if the bubble bursts, tighter financial conditions could drag down global growth. Because unlike in 2000, this time AI is everywhere. So what happens next? Every era has its next big thing. The railroads, the radio, the internet, crypto, and now AI. Each started with wild optimism and then met reality. And yet from every crash, something lasting emerged. AI might follow the same arc. For now, the mood remains bullish or delusional, depending on who you ask. The AI bubble may not burst tomorrow, but it's definitely inflating. And bubbles rarely deflate politely. One the facts, the latest developments, news that gets straight to the point. Well, we've got all three just for you. This is First Post Live, a brand new show, your window into what really matters. Don't miss it.